Okay, chat. I have a trade recap for December 1st. So it is obviously December 2nd, and you're probably still seeing this a day later after December 2nd. I'm a little behind on my journaling, at least for the video portion. I have it in my journal. I just haven't recorded it and put it on video yet. So let's go over December 1st price action. So with the price action for December 1st, I've been bullish on the higher time frame. Higher time frame, we set out some significant lows and we've been trending higher and higher and higher. So with that being said, coming into December 1st, Monday morning, the price action, right? 9:30 is opened here. And London, right? So I'm actually going to show you a nice little tool that I have, right? We have Asia highs, London highs that are relatively equal, and we have London lows that get swept in pre-market, right? So now I'm already bullish on the higher time frame, and I have the morning manipulation that happens before I even need us, before price even trades higher, right? So I have everything I kind of need to look for longs. So the one thing I didn't like was that when market opened, we created these relative equal lows down here, which I didn't really like too much because I could have seen this being where price came back and pulled back and probably took out a low one more time. But after this huge displacement candle, I'm not really worried about these lows anymore, right? So now we're going to go into this 15-minute leg here because there's a lot that happens inside of this 15-minute leg that I'm going to go over, right? So zooming into the 5-minute, I'm taking a continuation model, right? I use PB trading kind of entry criterias with my perspective of the market, which is very similar to theirs. But I have my buy side and my sell side, right? So obviously this is a buy side and we take it out. Now, this is where most people would look for a short, right? Which isn't necessarily wrong because after we sweep out this buy side, we do get a nice little sell off to the downside, right? And this is where I want to go over the mistake I made and what I really should have been waiting for, right? I'm not looking for shorts here because, like I said, I'm looking for a continuation model. I'm looking for price to continue trading higher because I have a higher time frame bias. Now, you might be asking, what's my drawn liquidity? Well, this 15-minute is unmitigated. So I'm looking to see, can price push back into the 15 unmitigated fair value gap, right? So we have this at the time was unmitigated 15-minute that's bullish. And we have the stacked, if it hurries up, all right, and we have the stacked 5 minutes that are unmitigated. So basically what I wanted to see was price pull back to a 5-minute fair value gap and basically have a sweep of liquidity with the highest time frame inversion. Now, after being on the 5-minute, the most clear drawn liquidity I saw was this. Well, if you zoom in, this 1 minute sitting inside of that 5 minute. So this is kind of what I'm trying to use as my entry criteria, right? So price hits the 5-minute, trades higher, takes out this high, comes down, takes out this low. We have a nice reaction, right? The highest time frame inversion is just 1 minute, and I ended up taking a couple contracts lower than usual at this IFVG entry right here. So I do end up getting stopped out pretty quickly, about 2 minutes into the trade, a minute and a half actually, and price ends up going to my break even point, which was this internal high right here. And at the time I was already out the trade, I lost around 200 and something dollars. And now I want to go over the mistake that made me really lose this trade, right? So the mistake that came with this trade was this, right? So after a continuation, when I'm looking for a continuation play, right? And this is mainly, and I think only when we have stacked fair value gaps, and this is something I've been back testing. Whenever you have stacked fair value gaps like this, if it's to 15 minutes, if it's to 5 minutes, if you have two stacked fair value gaps like this, basically the concept is you want to look at premium and discount, right? So if we're going to take out this high, right, I want to look at the manipulation leg that takes out this high. From this low to this high, we take out the high in this manipulation leg. So what I want to do is measure the low to the high, and I want to look for the 5-minute or 15-minute, in this case 5-minute fair value gap that's in discount. If I'm bullish, if I'm bearish, it's in premium. So the fair value gap that was in discount is this fair value gap. So my mistake was I tried to take a long in premium, right? And this is why I said you can even short this fair value gap if you have that conviction. You can even short down to this fair value gap down there in discount. You could take, right? We end up taking out a very significant drawn liquidity, which is Asian and London highs. This is where you can look for, this is kind of a mech model in my opinion. This is where you can look for that inversion on the higher time frame. All right, we have this 2-minute inversion. You could take it you know, here and short down into this 5 minute that's in discount. Anything you feel comfortable with, right? There is definitely a good solid short in there. I'm just waiting for longs. That's kind of what I was set for. So in this occasion, I would be waiting for longs. Now I'm taking the exact same setup, but now I'm taking it in a place that makes sense logically. We have this 5 minute discount for value gap. We have the sweep of liquidity. And now at this point, it's just about waiting for the highest time frame inversion, in which I studied this, I believe, was the 1 minute, right? So I'm going to go ahead and let me mark this out as my minor sell side. And then we have what? We have this higher time frame inversion right there. And this is where you get in long position and you get a close squeezes right above it. And then you could target back to that unmitigated 15-minute fair value gap, take partials along the way, or have a break even point that you're comfortable with. And then you could risk below, I would say, this fair value gap here. But for extra safety, you could risk below this IFVG right there. So you get a nice little 2.5, and it's a pretty much straight move straight to TP, depending on your break even point. Obviously, if you're going to break even at one of these highs up here, you're probably going to get stopped out, break even. But I possibly would have waited for this internal high right here. This probably why, because this is most likely going to be the turtle soup. We're inside of a fair value gap. So we do take out this high. This is pretty much where I would go break even or even trail my stop, and price pretty much just run straight through that. So that's how my trading went for December 1st. So I think the only things I need to note are premium and discount ranges. So that's something I actually added to my bag. I kind of used it today for December 2nd trade, which I'm going to make a separate video for that. And I'll show you kind of how I use that and when not to use it. Today's trade is going to show you exactly when I shouldn't use something like premium and discount in that type of range. But yeah, so that's kind of the day. And I hope you guys enjoyed. And I'll see you guys in the next one.